Good evening and a very warm welcome to First Issues. The hotel behind me, Avani here in Gaborone, is where financial analysts gathered last week at the invitation of First National Bank Botswana to interrogate the bank's financial performance for the half year ended December 2017. To share the results with the analysts and other invited guests was CEO of FNB Stephen Bokhatu and his Chief Financial Officer Commendable. While the global economic data for the period under review was reported to have been generally strong, with most indicators beating market expectations, local growth slowed to 1.8% year-on-year in the third quarter of 2017. Despite this, FNB Botswana released some very sound numbers. Profit before tax is up 9%. Non-interest income is up 10%. And they have reduced impairments by 15%. Does this mean that the era of negative growth that saw the company record a minus 15% profits before tax a few years ago is well and truly over with this second positive half-year result? How was this outcome achieved? We had the opportunity to catch up with those at the helm of the bank here at First Place in Gaborone's Central Business District, the engine house of the company's operations. With a 9% increase in profits before tax, would you say FNB has fully turned the corner?
If you go back a couple of years, 3-4 years to be exact, we were actually in negative territory. Our profits were declining by between 5 and about 18%. What we have started seeing from 2015, 2016 onwards is an upward trajectory in year-on-year growth. So I will say, yes, we have turned the corner, that our results are going in the direction that we are expecting them to.
CFO Commendable says the positive results are all the more pleasing, having been achieved in a difficult environment.
I would say yes, as a bank, we are pleased with the results. It has been a tough trading period, and not only for the last 6 months, but at least the last 4 years. But I think the last 6 months, we have actually shown that the business has stabilized and we are poised for growth, yes, so we are pleased.
What have been the main drivers of this growth?
I shared last year when we were presenting the results that the focus for the next 12 to 18 months is going to be on efficiencies, because we appreciated that this was not a balance sheet growth environment. With all the various challenges, macroeconomic challenges in the country, we knew that our customers' disposable incomes were actually declining. There was a lot of pressure on the consumer to service their debt. We knew that the businesses were not finding enough growth opportunities despite facilities that had been approved for them. They were not drawing down. So we appreciated and came to the realization that it's not a balance sheet growth environment. And that is why I indicated at the result presentation that our focus is going to be on efficiencies. So there are a number of things that we've been doing. On the collection side, we revamped the area. We intensified our collection efforts by introducing new systems and restructuring the area. And the results are there for everyone to see, leading to a decline of about 15% in our impairments. The second thing that we have done is we have revamped our processes in an effort to ensure that our turnaround times are improved. What we have also been doing is we have been looking at other efficiencies from a cost perspective to modernize, just to make sure that the costs of providing service are reduced for the benefit of our customers. To that extent, we have been centralizing some of our operations, removing the operations area from the branches and from other areas to a central place so that we can achieve economies of scale. So yeah, those are some of the initiatives that we've been busy with. From an income perspective, we have been very successful with our bricks to click strategy, which was a strategy aimed at driving our customers away from the branches so that they utilize our self-service areas. So that has been going extremely well. We have now migrated most of our transactions away from the branches to the electronic platforms. In actual fact, when you look at some of the branches that we have been opening and the branches that we have been revamping, that's exactly the theme, to increase the space where customers can do self-service, where they can access our facilities themselves 24/7 away from the branches. So the branch setup, the branches have become smaller and a very good proportion of our branches is actually a self-service area. So that's what we have been doing. And you'd see the results from an NIR perspective because it means customers are transacting throughout the day. We have also been focusing on explaining more of our products to our customers so that they make maximum use of all the services that the bank offers. And as I indicated, you can see the results from an NIR, non-interest revenue perspective, from a lowering impairment, and from a cost perspective, despite the fact that we have actually been investing, contrary to what other businesses are doing in a difficult environment as the one that we are operating in. We have continued our investments, but even with that continued investment into the business, we have only seen our costs growing by about 10%.
Both our guests concur that the efficiencies that the bank has put in place were instrumental in bringing some stability to the bank's performance in the face of some once-off challenges that the industry experienced.
I think when we look at our results over the last 12 months or so, we know that there were some significant once-off events that have primarily driven our results. As we shared, our results for 2015, we actually had a decline of about 18%, which then turned into a positive growth of 9% into December 2016, and now at a growth of 9% again in 2017. So that in itself shows you a bit of volatility, but that volatility came through a number of once-off events. For example, BCL that happened closer to the end of 2016, and with the full impact thereof coming in the second half of the year of June 2017. So those are some of the once-off things that brought some instability into the results. However, when we look forward, we believe that the results that we've put forward are quite sustainable. What has driven that has been efficiencies around collections, which we believe is going to be something that is sustainable given that we've put processes, systems in place that will actually be in operation into the future.
There's still more to come your way, so do stay tuned and join us after the break.
What is the future of help? It's to help people find the great in themselves. The drive, the passion. Help them find their true potential. Help them stretch. Help them grow. That's why we help people help themselves, help the world, because a little help goes a long, long way. FNB, how can we help you?
Welcome back to First Issues as we unpack the FNB half-year financial results announced last week. Joining us is the CEO, Stephen Bogatsu. Being a market leader such as FNB, I'm sure has its benefits as well as its challenges.
The most important thing is, as a market leader, everybody is looking up to you to do what is right for the industry. Unfortunately, it also comes with challenges such as the ones that we have experienced in the past. The most important challenge, if I can give an example of the cut scheming that we saw happening throughout the country, particularly around December and January. Because we've got the largest number of ATMs, over 75% market share of ATMs, because we've got the largest number of customers, it would have seemed as if the cut scheming was targeting FNB only, and that FNB systems were compromised. That is not the case, because this particular cut scheming issue affected the entire industry. Every player except for one bank were affected. But if you read comments on social media, you would have actually thought that it's only FNB whose systems have been compromised, which was actually not the case. But what we have been doing around that particular issue is, every time we realize that our customers' cards have been compromised, we would block the cards and inform the customers that their cards have been compromised, and we would offer them other solutions that will enable them to do cash withdrawals and payments and so on and so forth, such as the cardless withdrawals, the e-wallets, while we are still organizing another replacement card for them at no cost to the customer. The second thing that we have done in such instances where we realize that our customers' cards have been compromised is we have refunded our customers. We have done some investigations, and we've refunded all the customers that have been impacted. Unfortunately, cut scheming will be with us for a while because the criminals are getting more sophisticated by the day. As you discover there are new methods, they are always coming up with other ways of defrauding our customers and the banks. But it does not mean that the industry systems are compromised. It's just that, unfortunately, the fraudsters are ahead of us, and we have to keep pace with them.
The Know Your Customer campaign must have been particularly logistically challenging for FNB.
That's correct, Namitso. KYC was a very challenging project for us by the mere fact that we have 480,000 customers that we had to subject to KYC. Some very important lessons have come through in the process, but again, this is an industry-wide project. It does not only affect banking, it's a project that affected other service providers. We're seeing insurance companies starting their own KYC process, and we know that it will eventually go to other industries outside the financial services center. But yes, there were some very important lessons that we learned through KYC, and I'm glad that at 97.3% compliance rate, we are over that hurdle now.
During your presentation, you also shared some very interesting partnerships you have undertaken in the recent months. Could you please unpack those for us and what they mean for you as a bank as well as a consumer?
As I was sharing our strategy six months ago, I indicated that one of the levers that we will be pulling would be strategic partnerships. To that extent, we have partnered with Sefalana for their online shopping. It enables you as a consumer to do shopping online and using the FNB virtual payment platform to pay for the basket of goods that you would have chosen online and have those goods delivered to your place by the other partners that are part of this equation. So it's a very exciting proposition for us because it enables you to do shopping for your mom in Ramotswa and have the goods delivered to her in that area. So that's a very exciting proposition that we have put in place, partnership that we have in place. Another partnership that we also launched during the financial year was a partnership with Water Utilities Corporation called *186#, which enables you again to pay your bills without necessarily going to their offices to queue, request statements and do the payments. You can just do that online from the comfort of your home or from your office to pay for your bills and to also request reconnections. There will be more partnerships that we will reveal, which makes it very convenient for our customers to do business.
Welcome back to First Issues as we continue to discuss FNB Botswana's half-year financial results with the bank's leadership. Is there anything at all you think could have been done differently or better within the period under review?
I think when we look back to the last 6 months, again, this story started unfolding about a year ago when we rolled out our strategy for 2020. So with our focus around extracting value from current, there are some initiatives that could have taken traction much quicker. But again, some of the processes do require time, such as automation of processes or going through review of processes and enhancing those processes, because you have people involved in those processes. So it takes a lot of negotiation. It actually takes a lot of having people buy into new processes. So that in itself does require time. And unfortunately, you cannot fast track anything that involves people having to adapt to change.
This is your final results announcement as CFO of FNB Botswana. What have been your learnings and experiences of the Botswana market over the past 2.5 years?
I arrived in Botswana in October of 2015, and I think during that time I think we were still at the height of the drought, even though in 2016 we started seeing the benefit of the rains coming through. So I think I came at the right time when the market was probably at the height of the turbulent cycle, but also ready to bottom out. So that in itself gives one an opportunity to really go through the cycle, learn a lot about how the cycle goes through, and to experience this with the ExCo team at FNB and strategizing around how do we work around that. It's been a great learning and rewarding experience.
What can FNB clients expect from the bank's decision to be more cautious in their lending, as shared during the announcement?
Our experiences have been that there are certain sectors and certain areas that have been particularly challenging. If you take the property market, for instance, properties above 1.5 million, 1.52 million and above have been we have had a lot of stresses in that particular portfolio. But properties below 1.5 million have managed to retain their value as well as sustain the rental incomes. So that is the sort of area that we still want to continue playing in. And that's the reason why we have introduced a product called Moto, which is targeting the bracket below 1.5 million. That's the reason why we have also introduced the 105% mortgage lending, because we have realized that demand for that particular segment has not been satisfied by the supply out there in the market. So we are going to be selective in our credit, but that does not mean that we are closing shop. All it means is based on the experiences that we're currently going through right now from an impairments perspective, we will continue to exercise caution in lending. So consumers and businesses have got nothing to fear because we will have the conversations with them and we will assist them as they require.
We also got some objective commentary from analysts Gary Juma of Motswedi Securities and Tsegofatso Tlong of Khori Capital, who were present at the half-year results announcement.
I think the biggest observation was on the impairments line because it came down quite a lot, which is a positive because, I mean, your impairments, when they come down, that means that you're experiencing less in terms of your non-performing loans, right? So that's quite positive, especially in this environment that we're in where the consumer's under pressure so much. I mean, we're seeing auctions left, right, and center. There have been retrenchments, etc. So to see that line coming down is actually a positive to show that maybe now we've reached the bottom and we're hopefully at some point start to go back up to a more positive environment. That was the key takeaway for me.
We need to take it from the perspective of our local economic environment. For example, if you look, we're coming from a very tough economic landscape whereby we've seen credit growth numbers, they're coming out lower. Business confidence is not at levels where we would like it to be. GDP growth overall in the economy hasn't been as strong as we would have liked. And if you see a bank like FNB coming up with these good numbers, whereby interest income came up by 7% on the backdrop of cut in the bank rate sometime last year by 50 basis points, and you grow the interest income by 7%, that's a very good achievement. And then if you look at impairments, the household sector, the business sector, they've been struggling of late. And if you see a bank like FNB managing to reduce the impairment charge by 15%, that's a very great achievement. Then in terms of the bottom line, which is what excites shareholders, 9% growth in profit for the period. We've seen other banks, they've actually issued out profit warning signs that their financial results will be lower. But if you see the bottom line coming up by 9% and the bank declaring a dividend of 5 tebe, that's a very good achievement in light of the current environment.
At the presentation, Stephen Bogatsu made reference to a leadership renewal initiative that last year had caught the attention of the media. He says the bank has assembled a solid and capable team. What is the view of financial analysts on this matter? Here's what one analyst had to say.
The key is they're number one. So when you're number one in the market, it's more difficult because now you have to stay number one, right? So it's great that there's that rejuvenation in terms of management and in terms of automation and moving forward and progressing. Instead of saying, we're doing it right, let's just continue with the status quo. But there's an impetus to move forward and get better. And that's always good, especially when you're a market leader, to maintain your position as a market leader. I mean, especially because now all eyes are on them and everybody's trying to catch up, you know? So to keep being ahead, that's now the challenge. And it's good that they're coming to the party and saying, okay, this is how I intend to do that, right? I mean, we'll see as the strategy is rolled out how that actually pans out, but it's comforting to see that there is some forward thinking in that regard.